All right, I'm just going to do a quick setup recap. All right, so and I'll show you how I do some of the things I do. All right. So this was Meta. This was a quick bounce to resistance that was very easy to trade. So what you see here is I'm taking a look at this wave, this rally. Okay. So one of the things I notice is you have accumulation brick here. All right. So before I go any further, I'm going to explain how just some stuff. 1 second. All right. So usually when you see Renko is phenomenal, by the way. I mean, those who know how to use it and how it can be combined with volume, it is a major. It's just amazing. And if you want to know more about it, David Weiss did a webinar on it. It's on YouTube with Linda Brashke. And anyway, that was one of his latest works. So that's something I had learned as well. And I kind of advanced it with, my own indicators and stuff like that. So here's the idea, right? Obviously, you see breakouts and test of breakouts and all of that, right? Okay, so I'll show you something here. Let's say this is a wave, right? This is a wave. It goes up, okay? Most of the time, you will see that since this is an up wave, there's an accumulation brick because, Renko has bricks, right? And that accumulation brick, it has high volume. Okay, this is where smart money is getting in. This is where they're ready to, they've done whatever they wanted to do. This is the low. All right. Then here you have a breakout. This is also the case because what happens is you have a prior rally, right? And breaks out above it, makes the higher high, right? When it does that, you have a high volume breakout. Both of these are known because of their volume. This is why volume is so important. It has high volume accumulation and a high volume breakout. Once it has high volume accumulation, high volume breakout, it rallies. And then typically over here, you have a climax. Sometimes you have it, sometimes you don't. Okay. Now, the pullback, as you know, everybody knows that one of the most standard setups is not only the breakout, but the test of the breakout, what a lot of Wyckoff traders call testing the creek or back up to the creek, right? So here, okay, now there is actually a derivative of this. Yes, you can test the high volume breakout. All right, so let's put this high volume here. That's testing of the creek, right? But there is a derivative of this, which is going lower than the breakout level, and it actually tests the high volume brick. Okay, this gets tested. I guess you could call this minor creek. I don't know what to call it, but this is the reality of what happens, and I'll show you over and over it happens. It happens a lot, and you can identify this because it is a high volume brick over here. Then you have a high volume breakout. So and a lot of times, you know what it does, and this is interesting because this behavior is, let me show you. Oh, shit. Ooh, 1 second. A lot of times it tests the high volume breakout, it bounces a little bit, and then it goes down and tests the high volume accumulation brick, and then it goes up. So there's some variations of this, meaning it could test the breakout, it could test the high volume accumulation area, or it can test both and then go. So this I see all the time, and same goes with distributions, just the opposite, just flip it upside down. So this area, buy low, right? This is where they get in, good amount of position. Then they take out the high and they exert the force of the buying overtakes the force of the resistance to break it. Then it has follow through. Then it either pulls back to the breakout level and goes, or pull back to the breakout level and then the accumulation level and then goes, or it just goes straight to the accumulation level and then goes, or it forms some type of range and some springing action and then goes. So these are just scenarios that happen, but they are very, very, very visible and can be planned for using Renko, because Renko is very good in that it can identify the, for lack of a better word, the strength of the brick or the strength of the buying and selling, which can be done using volume. For example, you'll see a high number in the breakout brick, or a high number in the accumulation brick, where you know that if it goes to this area, someone bought all of that in that range, in that brick. So chances are they'll defend it. And if they defend it, then it's going to go higher. When they defend, it really means they're just buying more. Okay? That they continue to buy to add to their position. Anyway, long story short, what you had here was, well, I think this was the one. I don't remember. Okay, so anyway, there was a breakout here, and it got tested. And I guess it went down later on. I don't know where it went down. I just see it here. I don't see any more data, so I don't know what the hell it did to the data. But basically, this is the example. I mean, it tested the breakout, then it went up, then it went down to the accumulation break, tested that, and then went up. Right? So this is what it does. So I'm gonna take a look at the breakout test, right? So first of all, you see the Renko has BO and ACM. That means that's the breakout level and that breakout break, and then before that is the accumulation break around this area. I know by the volume signature that there's some accumulation there. I prefer to have much more volume there, but I look for, I don't want to make it too much of a constraint. So I know that this breakout brick right here with the 40, that's the biggest brick in the last 4 bricks, biggest up volume in the last 5 bricks. So I know there's going to be some bounce. All right, there's going to be some bounce. I don't know how much of a bounce it's going to be, but there's going to be a bounce. All right, and this is just the test of the breakout method. It's nothing rocket science. Everybody knows this. You know it, I know it, everybody knows it. It's just that Renko, in my opinion, shows this setup the best. Yes, you can use daily and all of that, but Renko it really is, I don't think it's properly used the way it should be, because it can be combined with volume, but I don't see folks doing that, and I think there's a lot of benefit there. Anyway, so it rallies, then the market has a COB and goes down to that area, all right? Starts going sideways. Then what do you see? You see this big green bar? What's that telling you? It's saying that at the breakout level, where that Renko break is, the buyers are still there. This is the question that you should be asking yourself when trading the test of a breakout or a test of any prior level from where there was a lot of buying and selling. The question is, are they still there? Are those buyers still there? Are those sellers still there? And you confirm that on a lower time frame, like I'm showing you over here, a 5-minute. And guess what? What do you think this 5-minute big green bar means? You said that they're still there. It confirms that they're still there. So that is a very good sign. And it is quote unquote your signal to get in. Your signal to get in isn't, I don't know, some pattern. Your signal is the actual buying and selling at that level from where it was initially. Is it still there? If it is there, I want in. Why? Because the buying is still there. It will continue to go higher. All right. So why not get in? All right, so that's what happened here, and the pullback and it tested. Where's that test? Right there on this high test, and then it offered about $2 right into where that VPOC area or the POC or whatever, that right there. Tap, and that's where you get out. Why? Because that's where you should get out, right? It's good for targeting. And you have also that broken support ledge right there, broken support. That's where that POC is. It's broken support, right? So it gives you a lot of very clean indication of where to get out. So you get out. Where do you get in? On the pullback, where? Right here on this white bar, that low, that tested, right there. After the green bar up, bar back down, entry, exit right there, where the market broke, that you have PFC, out. So that was a very clean indication of entry and exit. So this is the idea. One is the level. You can use a high time frame for your levels. Obviously, that's what everyone does. You could also use Renko with volume, which I think is phenomenal, simply because you have much greater intuition about whether there's going to be a bounce at those bricks because of that high volume print. It is the only, it kind of, it kind of shows you it very clearly, because in candles and bars, right, they go up, down, up, down, up, down. It'll just confuse you with various patterns. It'll just confuse you. But Renko and point and figure have a huge advantage in that they cut out the noise. The way they do that is you have the same brick, 1 point up, and another point up, and another point up. They all look the same. When it comes back down, it's a brick. That's 1 point, 1 point, 1 point. If you're using a 1 point box size, it's the same look and feel. Whereas in bars and candles, they form a lot of patterns, and Renko takes out a lot of that noise. Right? I'm not saying that bar charts don't have their place. Of course they do. Like for the lower time frame entry, when I see this huge green bar on the test of a breakout, here was the test. The test occurred. This breakout was tested right there, and the buyers came in right there, and the entry offered right there, and the exit offered right there, from support to resistance. So anyway, so I'm going to be doing a little bit more of this type of stuff and showing just some setups and what happens during those setups for tested the breakout, tested the breakdown, tested the accumulation break, tested the distribution area, things like that. Maybe some springs and up thrusts as well, but you really don't need too many. You just need just a couple. So, and that's all, folks. Take care. Have a good rest of your weekend. Bye.